This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And it has been kind of a quiet day and a rather dreary week here for the grain complex. Looking at December corn, we've been drifting lower, which is not what you want to see. You want to see that peak panic capitulatory style of trade that usually puts in a near-term bottom. We obviously got a bearish USDA report, a ultra bearish USDA report earlier in the week. We traded lock limit lower, continued to bleed lower, but never got that peak panic bounce. We need to see that to form a near-term bottom. Potentially we could get that on stopped hunt below 363 3/4 from the contract lows back in the middle part of May. Other than that, it's a technical graveyard and the bears remain in control. A lot of damage for the bulls to get things going in their direction. Perhaps the crop tours that kick off here in the coming weeks will be able to offer some sort of fundamental support, but technicals still extremely bearish at this point in time outside of the RSI that is extremely oversold right now. I'd say stay clear, wait for a bottom to form. It's a process, not necessarily a point. On the soybean market, a little bit different of a story. We've been chopping around here in a 20-cent range over the past 1 to 2 weeks. 875 to 895. We've broken below that low end of the range, which opens the door for a retest of 854.5, which is the lows from earlier in the month. Breaking close below there potentially takes us towards contract lows closer to 815. Now, we've gotten some headlines regarding trade with China, but really not putting a whole lot of substance in the market. We've seen this headline before. It's a recycled headline, and right now it's shaping up to be more of an inevitable boy who cried wolf situation with trade. I wouldn't be surprised to see this continue on until we get closer to the election and President Trump decides to use that deal to spur voter interest in the Midwest. Now, wrapping things up with the wheat market, we have been extremely bearish on the wheat side of things, particularly in December Chicago wheat. 470, a big pocket for us. A break and close below here takes us to contract lows, 442.25. If you want to be long wheat, we'd suggest looking at the Kansas City contract closer to $4. So that's what we're looking at to the end of the weekend. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.